Welcome to the Short Vol Show, Short Vol Nation. I'm your host, Big D Lincoln, and I'm broadcasting live from the home of the Pilgrims in Cape Cod, Massachusetts. Welcome to the show. And I've promised a guy named Mike that I would not say anything about a certain C word. So we're not using the C word today, folks. Promised I would not use the C word until we've actually had confirmation by a Eli Mintz tweet at the end of a trading day. So whatever trading day that might be, that there is a confirmation of the C word with that tweet, then I will use that. For now, we're using a euphemism for the C word, which is the curve moving in the right direction. So right now the curve is pretty much flat, but we obviously like what we see today. I got an idea for the government. How about we don't go to war? I saw a tweet or a stock tweet, whatever, and it said volatility will come in as soon as the first missiles are launched and there's certainty. Since when does launching missiles provide certainty for anything? I mean, I know it's kind of like old-fashioned or something, like the 60s and all that, but like, how about some peace? How about like we don't go to war? How about peace on Earth? Is that like out of date to actually say that? Why does every news report say, regardless of political party, say, we have to be strong and go to war against Syria? We can crush Syria in like 2 seconds. We've got the biggest military in the world by far, 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 far. We can crush all these people in 2 seconds. What, do we just want to use our toys, I suppose? Anyway, I will stop because I guess there's probably some people that are very pro-war that will get offended if I talk about peace too much, because that might be a controversial view. So I'll get off of that. Let's talk about the market, though. Nice rally today. Unemployment lowest in, I don't know, somebody said it was the lowest unemployment in 45 years. I haven't seen that written somewhere, but somebody at work told me that, so it must be true. NASDAQ futures right now, 6666. So if down 666 was bad, then maybe up 6666.5. So not quite. Is good. Quite the rally today. Could we go into now expiration week? I've postulated for a long time that expiration weeks are more volatile, at least as far as the way the VIX futures trade. Now, just to go back into some fundamentals of VIX trading here, let's pull up the term structure for a second. Okay, so let's see. Let me take a look and see if we can all see this. No, we can't. We've still got the beach behind me. Okay, now let's make me smaller, and we'll put me over in the corner there, and then we will pull up like something like that. All right. So, coming into expiration. Okay, expiration is next week, Wednesday. So the spot has to converge with the future on expiration. Shouldn't be a big deal right now because it's only 10 cents away. I have the future 1892 and spot 1902. So that's remarkably close. Most situations you would see it still, pretty far away. Maybe not surprising to have the future 50 cents away right now from spot. And usually spot, generally in normal conditions, spot is below all the futures. Today is kind of like moving day. Spot was below all the futures at one point today. Then it was above and below and moving all over the place. But essentially, this this chart should look more like that, which is totally flat, completely flat, no curvature, no slope, because essentially that is what's happening here. In the grand scheme of things, historically and whatnot, we are just completely flat. Now, why is everybody in short vol land thrilled about today with a flat chart like that? Well, because before we were downward sloping, we were inverted, we were backwardation. Now we're just extremely flat. We're like within 10 cents of a bunch of futures lining up, incredibly flat. We are still technically in backwardation right now because the front future is higher priced than the second month by 10 cents. So that could change by the end of the day, but we are still currently in backwardation. The percent shown on the bottom of the screen there is 0.32% in backwardation. So very flat curve, but moving. The VIX is down over a point currently, and it's been the air's been coming out of the balloon the last couple of days, and that's why there's some excitement in short vol world. People are, just ready to pop the champagne bottle. Maybe not, maybe so. A tweet could come, and it could all be kind of for naught. But what I was saying to my buddies just recently was, we hang out and get a couple more days of rally in a row, and then we could get that upward slope. And the more of an upward slope we can get this curve to go, the more sort of armor we have against a spike. Because now if things spike, all of a sudden, immediately in backwardation, immediately. Already in backwardation slightly, but from flat, any sort of little anomaly, even a mini tweak, could get us in trouble. But we are moving in the right direction. The air, this is like the third, if we end like we are looking now, I think it would be the second day of VIX coming in, but the 3 days ago we had VIX down all day, and then at the last minute it was up like, I think it closed up 40 cents, but by 4:15 it was only up 20 cents. So no big up VIX days in a while, and the air kind of coming out of the balloon. This is what was happening for all of you who maybe weren't following this last year. This is what was happening was, you have an up day, and you just come in and it's like down a few cents. The VIX is down a few cents. Maybe it's down 50 cents. It's just slowly, kind of nothing too exciting, but just slowly down the VIX, and it will tend to drag this curve down. Now, what will happen if we keep moving slowly down is that the front futures will get dragged down first, and then the back months will stay up a little bit higher. So maybe we can just look at it, give it a little historical context here. So if we were to go to, let's go to this date last year. So let's go to April. I don't even know what day it is. April 12th of 2017. Let's take a look. So it looks like that might have been a little spiky that day, coming off a little spiky. So, okay. So this is kind of what like a normal curve looks like, something like that, okay? So, and to get to that, we need more down days. We need the spot to drag things down. Now, in this situation here, where you have a curve that's going straight down like that, that will indicate to you that spot is below all of these futures. So, spot is somewhere below all of those futures for that day historically, and it's dragging the month down, but it's first dragging the front month, which is most sensitive to the situation, down. So back to our is the VIX more volatile the week before expiration discussion. If we put our curve back to where it was, the front month future is gonna generally kind of stick closer to spot right before expiration. So if this was a weeks out from expiration, then like a spike up in the spot would not mean that much of a movement up in the front month future. But with expiration approaching, that front month future is going to kind of stick to spot, and so it's going to, if spot moves around a lot, it's going to move around a lot. Whereas if it was 3 weeks out, spot can move around a little bit, and the front month future could be kind of unresponsive. But that is sort of what we mean when we talk about it being more volatile the week before. I'm this little guy in the corner of the screen. Let me make myself a little bit bigger because I feel like I'm just this little shrimp guy in the corner of the screen. Okay, there we go. So, this is an exciting day because we have gotten a little vol sell-off. Let's go to the charts, folks. Okay, so as the Nasdaq rallies back to, looks like it might actually be heading towards, back towards the highs of the day. The E-minis have rallied like 10 points while I've been sitting here talking, so that's kind of exciting. So VIX down to 1862. And only 9 cents difference between the front month and the second month futures now. It's only 8 cents difference now. This is almost like the play-by-play here. It's like we're watching a baseball game. Very exciting today, folks, because we are on the cusp of coming out of backwardation here. Now looking at 5 cents difference between the two futures. Wow, very exciting. Only 5 cents difference between the two futures here now, folks. And spot has once again regained. Spot is currently below all futures, and that's something we haven't seen in a while. We saw it for a little while today, but besides that, haven't seen that in a while. Spot once again below all futures right now, so very exciting. VVIX down to 98 again. It's been kind of bouncing off that 98 level back and forth a little bit. SVXY to 1166. Now we've had some damage. There has been some damage to all these products, and it will take a while to kind of get them back to any sort of decent level. So, but this is at least we're going in the right direction now with the VIX down 161. Let's take a look at the VIX chart, okay, for the last 20 days. And so you can see where our excitement is here, that we're kind of like on the cusp of kind of falling out of the range that it's been in for a little while. Now, I have a strange relationship with the charts as far as the VIX is concerned. I'm not a real big chart guy, and the thing is that I really don't believe that you can like identify like support and resistance. Well, how about this? You could make a better case with me to identify sort of support and resistance in a straight up VIX chart like this way more than you could in like a UVXY chart. UVXY chart, this line here that some people might call support or something, that is absolutely meaningless. And it's meaningless due to the fact that many things, but basically one of the most basic things is that this is an ETF that it's based on supply of demand in puts in the SPX. Now, where's puts on the SPX in this graph? You don't see them. It's also more directly related to two futures, and the weighting of the two futures changes every single day. Do you see any calculation for that on here? No, you don't. So anybody who's using this, you could use this and say, oh, well, it's low, or it's going down, or it's going up to help guide you. But to say that like, oh, there's a meaningful support or resistance or something anywhere on this chart, I don't buy it. Sorry. I don't really buy technical analysis anyways, but here even less so. But, the low right now in the last 20 days is 1385. We're pretty far off that low. Now, what are people talking about when they say, I don't want to use okay, I'm taking a break from not using the word just to explain to beginning people. Okay, so this doesn't count. Okay, so why do people get so excited about contango? This is just theoretically, folks. Okay, so don't get upset with me. I'm not jinxing anything. Why do people get so excited about contango when, like, say somebody says, okay, we're in contango by 10%. I'm excited because I'm shorting UVXY or TVIX. Why do we get so excited? Well, because if you're in contango by 10%, you are every day, that 10% represents a 10% that the value of your ETF is losing that much value every month. That's not every year. It's not 10% per year. It's 10% per month. So that's what makes it exciting. So that 10% would be 120% per year that it's losing value. And that's why we get excited when things get in contango. And seeing as stuff is historically in contango for like 80% of the time, we are expecting it to go back to that level at some time soon, back to that situation at some time soon. And the other reason that people get so excited about when stuff is in contango is because that is only one of the things that can bring prices of these instruments down. A crush in the actual VIX can bring it down lower. The beta drift of a leveraged fund like TVIX can bring it lower. So you've got all this stuff going for you to give you edge to the downside once you're in contango, and that's what everybody gets so excited about. It's like this secret, well, not secret, but everybody doesn't know about it. This little edge that makes betting short against these things have a little bit of probability in your favor. And when you're a trader, you're looking for that. You're looking for an edge. So as I speak, we are 5 cents away from coming out of backwardation right now. So 5 cents away. So if you were to buy on the bid, if you were to buy the second month future on the pay the offer of 1880 and sell the front one on the bid, you would be doing it for even now. So that would technically be for even, which means no more backwardation. So we're very close, folks, and we'll see what happens on the close here. Now, let me just mention that we've been through this maybe I think for sure 3 times now where we were very close and then something happened and it just took us out of it. We've also gone through a couple times where we stayed in we came out of backwardation for like 1 day or something and then something happened. So we need to get our armor on. We need for this to happen and for the vol to keep coming in so that the slope of the curve can steepen. You know, in by 1% doesn't help our position very much as far as decay, and B, you know, we're very close to coming back. If we're in like contango by 12%, then you know, you have this armor against a spike because it takes so much to get spot back up through all the futures again. When you've got, you know, when spot is 10 and futures go all the way up to 17, then you need a huge move in vol to go back into backwardation and to get spot above everything. But right now, wouldn't take much. So right now, UVXY actually a little bit coming off the lows, and I would attribute the move right now to these guys are actually going to try to line up these futures on the close a little bit. They're going to try to get stuff. This typically happens on a moving day is the futures are all over the board, and they kind of they line up a little bit better right on the close. We are still now 4 cents away from being flat on the futures. I've got the front month 1885, second month 1876. So we're 4 cents away from coming out here, from emerging, as you might say. Now 5 cents away from emerging. So it's going to be close here on the close. And either way, it's been a nice day for the short vol trade. The VIX currently down over 1.5 points, which is beautiful. And everything's looking great. This is a great day for the short vol world, the short vol show. I will be out of town mid next week, but we are going to have some guest hosts come in to fill the seat for the short vol show, and I hope that you will treat them with the same love that you treat me, and it should be exciting. You'll have to see who we have come and sit in the seat for then next week. But wouldn't it be beautiful to come into expiration and with a new situation. Okay, so my stopping talking about the C. I'm going to stop talking about the C word again because now we're back to reality. It's not a hypothetical situation, and I'm going to stick with what I told Mike about not talking about it. So here we go into the close. Great day so far. Very exciting. I was at a side job. Oh, now we are 3 cents away from coming out. 1 cent away from coming out here, folks. I've got the front month 1876, the second month 1875. So 1 cent away from coming out. This is beautiful. 2 cents away from coming out right now. Unbelievable. Will this be a day that we look back to and say, "Oh, the day we came out and we never came back again in," or will this just be one of many where I'm just kicking myself for getting excited? Well, we will have to see. That remains to be seen. But right now, futures are below every single. I'm sorry, spot is below every single future, and it's a beautiful sight to behold as we see the term structure normalizing. Very exciting. Some people, would like to go to Disney World. Some people would like to, I don't know, play tennis or something. But for short vol folks, we love this. This is what we love. We love seeing spot kind of just drift down below all the futures, and the futures slowly start to curve down behind it. We're normalizing. So we have the front month future down $1.27, with the second month only down 71 cents. So that relationship is normalizing in a huge way today. We don't know if we will make it. We don't know if we will make it out of backwardation, but regardless, normalizing in a huge way today. Right now, 6 cents away, 5 cents away, and we're just going to have to wait and to see as we go into the close. I really do appreciate you joining me today for the Short Vol Show. And once again, we will have some guests hosting next week, and I hope that you will treat them with the same loving open arms that you treat me.